Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 24th, 2025, and we're diving into Verisign's third quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Verisign, a leader in internet infrastructure and domain name registry services, has just released its Q3 2025 results, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the top line. Verisign reported a revenue of $419 million for Q3 2025, marking a 7.3% increase from the same quarter last year. John, what are the key drivers behind this growth?
Absolutely. The revenue growth is primarily driven by an increase in domain name registrations and renewals. Verisign's operating income also rose to $284 million, reflecting efficient cost management and operational execution. Net income saw a healthy rise to $213 million, up from $201 million in the previous year.
Cash flow and shareholder returns. Moving on to cash flow and shareholder returns, Verisign reported cash flow from operations of $308 million. How does this impact their financial strategy?
This robust cash flow allows Verisign to continue its strategy of returning value to shareholders. In Q3, they repurchased $215 million worth of shares and approved a dividend of 77 cents per share. These actions underscore their commitment to enhancing shareholder value.
Domain name base and market position. Verisign's domain name base is a critical component of its business. Can you tell us about the recent trends in this area?
Verisign ended the quarter with 171.9 million .com and .net domain name registrations, a 1.4% increase from last year. They processed 10.6 million new registrations, up from 9.3 million in Q3 2024. The renewal rate also improved to 75.5%, indicating strong customer retention and market position.
Operational efficiencies and future outlook. Looking ahead, what can we expect from Verisign in terms of operational efficiencies and future growth?
Verisign's deferred revenues increased to $1.38 billion, providing a solid foundation for future revenue recognition. They have $618 million in cash and equivalents and $1.33 billion available for future share repurchases. These factors position Verisign well for continued growth and shareholder returns.
Key takeaways. In summary, Verisign has delivered a strong performance in Q3 2025 with significant revenue growth, improved profitability, and strategic shareholder returns. John, any final thoughts on Verisign's investment prospects?
Verisign's consistent financial performance and strategic initiatives make it an attractive investment. Their focus on domain name growth and shareholder value is commendable. Investors should keep an eye on their future developments.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Verisign's performance in the comments below.